Abe M'Bodj, thank you so much for joining me today. You've been very involved in private equity transactions throughout 2019 and even before that. PE in gastroenterology has been a hot topic for 12 months to 18 months now, and then COVID hit. A lot of people, a lot of physicians are actually wondering how it's going to pan out from this point on. And I'm so glad that you could join me today, and I look forward to chatting with you about this.
Absolutely, Praveen. Thank you for having me. I watched a couple of the interviews you've done previously and thought they were well done. So I'm very happy to participate. Again, I'm Abe M'Bodj with Provident Healthcare Partners, and we're a healthcare-focused investment bank that has a large focus on physician transactions. So a lot of work in the GI space, a lot of work in the physician space in general. So we've been kind of on the front lines of seeing private equity and the change that COVID has brought to the market. So happy to talk about that today.
Let me start by asking you a broader question. So now that we're in this during COVID period, what is private equity thinking, and how has it affected private equity as an industry in general?
It's forced everyone, just like the society at large, right? It's forced everyone into two buckets. There are people that are pressing forward and trying to figure things out from a deal standpoint, and then there are people that have taken a step back and really are evaluating, is it the right time to deploy capital, or should we be investing right now? A lot of them have been forced to focus on their portfolio companies or businesses that they've already made investments into. We're starting to see the dust settle some, not necessarily in regards to COVID and what's going on, but in regards to getting a handle on what's going on within their businesses. And we are starting to see some private equity firms return to at least talking about the timeline to either completing deals that were put on hold as a result of COVID, or looking at new opportunities. So you had done an interview with the president from 1GI. There's been a couple of transactions that have closed as well with 1GI and Webster with the GI space. In April, we closed a women's health transaction in another space, obviously. But there are transactions that are getting done, albeit I think all transactions that are getting done at this point in time have creative structures involved that are different than what everyone thought they were going to be.
Like we used to talk about the number of transactions that were underway in GI, and you would come up with a number of 16 to 20, and we went with that for a while, right? That was my estimate as well. So if I ask you the same question now, how many transactions are underway? What does that number look like right now for GI?
Yeah, I think the number of transactions underway hasn't changed significantly, right? So some of those have closed, some of those have stopped. I'd still say it's around the 15 range. That being said, those transactions, I'm certain, are all figuring out, what are they going to do? Do they want to? And just because they're ongoing doesn't mean they're imminently going to close, right? They're figuring out, does it make sense for us to wait until things have turned around? What impact could that have on our transaction in terms of the timing of when we went to market? Will our valuation remain the same if we choose to wait till the other end of COVID-19? And some people are going to wait. Others are trying to figure out, are there structures that can make sense for them to close the deal in the short term? Like, is there an opportunity to structure the cash payouts? Because really, everyone's concerned about cash at this point in time, right? So for private equity firms, for platform transactions, it's difficult to get third-party lenders or outside financing to close those transactions. So they're needing to put up more cash out of their portfolio or out of their investment pools. If you're an established platform, their lenders are skeptical to give them more money or let them draw too much of their credit facilities or revolvers that they use to finance transactions. So they're wanting to, and then frankly, they have a business to run as well, right? So they want to conserve as much of that cash as they can. And it's our firm's expectation that this is going to accelerate M&A activity. When that's going to happen, we don't really know. But on the other side of this, it is painting a picture that absolutely shows the benefits of being involved in a large organization with scale that can navigate an environment like this, as opposed to having to navigate it as an independent practice. And I've seen the mindset change from physicians and practices that were skeptical about ideas like this. They're seeing the value in some of that now.
So now pre-COVID, the multiples were pretty good for private practices in general and even gastroenterology. How have these multiples changed now, or how do you expect this to change now? Are valuations going to drop? From the point of view of private equity, how would they even compute valuation at this point
Right.
of view?
Most deals that are currently underway, and when I say underway, have moved all the way to the point of identifying the actual party that they want to try to get a transaction done with, and are in what's called due diligence, right? Those transactions, we actually are seeing valuations remain the same in terms of the total purchase price or enterprise value of those transactions, are remaining, what was agreed to at the letter of intent stage when they identified that buyer and chose to move in with that party. Now, that being said, what's changing is really the cash at closing. So you may not get as much cash at the closing of the transaction that you originally signed the letter of intent for. But that being said, through cash deferrals or seller notes or different sources of financing, you're getting back to the same place, albeit over a call it 12 to 24 month period. From a multiple standpoint going forward, we are expecting multiples to come down a little bit. They're without question. I mean, there's transactions in the market, maybe not necessarily specific to GI, but healthcare services and physician investment in general. Just valuations have been absurd for the last few years, right? Valuations in the teens, double-digit multiples were a normalcy. That's not a normalcy if you look at the history of healthcare services investing. So we do expect those to come down. I think also the other impact of this is, again, in any transaction, there's three parties. There's the seller, the buyer, and then there are, the lenders or people that are financing the transaction for a lot of these. And lenders' perspectives on the economy and COVID and the deal environment are going to impact valuations as well, right? They're going to be more skittish to lend money for new platforms that have recently gone through a traumatic business event, thinking if we're on the other side of this now, they got to have a very strong certainty on what the future cash flows of those businesses are going to be, or what the future profits of those businesses are going to be, because they need to get paid back whatever capital they're lending to these companies. So if the lending markets or the debt markets are frozen as well, then you can't raise as much debt to finance a transaction, which also has an impact on valuation. People used to quote, dental practice management never had a down year. The only year the industry didn't grow was in the midst of the financial crisis in 08 and 09. Well, that was probably one of the hardest hit industries in terms of being an elective procedure throughout this COVID, and a lot of those businesses are in serious trouble. So people are finding that areas of investment that they thought were originally untouchable are not so untouchable. And as a result, it's going to change their risk evaluation of practices, and valuations will come down.
You brought up, the third player in a transaction, the lenders, and these are typically for deals that are leveraged. Like, so meaning you take debt on behalf of the company that you're investing, and then that's how the transaction happens. Correct?
Yep, that's correct.
So now I would assume that a lot of private equity transactions that have happened, not just in GI, but medical practice industry in general, would be leveraged, which means that it's like taking mortgage, like, to understand very, very simply, right? Like, so now then it's imperative that I generate the amount of cash that is required to pay my mortgage every month, every quarter, every year, whatever that is. Now, in a pandemic, situation like this, like when there's uncertainty about cash flows in general for all businesses, what happens to lender behavior? I'm not talking about new transactions now, but I'm talking about transactions that are already in existence. How would lenders behave with companies that might maybe struggle with cash flows in the future? Who knows? But just your views on that.
And you've seen large companies out there enter Chapter 11, right? So that's the worst case scenario, right? If these companies get towards busting, they call it in the industry busting their covenants. There are certain covenants, or if you think about it like a house, you need to maintain a certain loan to value ratio, or just to stay up on the payments. But the companies generally need to maintain some sort of EBITDA to debt ratio, and that's in their loan covenant for the agreement. You obviously have COVID, which is causing EBITDA to drop, and they have a certain amount of debt on their books, so those ratios are coming up. Some lenders out there that are willing to stand by their portfolio companies and actually will lend them more money to get through the kind of short term fallout we're seeing from COVID. But look, it is certainly a possibility that there are companies that end up in bankruptcy, and really, there's probably going to be. I don't think that's specifically the case within GI, but in healthcare services in general, there are companies out there that have taken on quite a bit of outside, debt financing, and they're not going to be able to pay those obligations. So that does happen. Now, how that plays out practically, if you think about it, right, like a house, right? The last thing the bank wants to do is foreclose on your house, right? That's a headache for everyone. It's a headache for, it's not, the bank doesn't enjoy doing that. It means that they don't necessarily, they haven't gotten paid back, and they're trying to recoup their investment through the foreclosure of the house. Physician practices or private equity portfolio companies, it's the same thing. The last thing they want to do is foreclose on or force these businesses into bankruptcy. And basically what ends up happening a lot of times is they end up taking over the equity of the company, because that's all that the company has. They're not paying back their debt. Everyone in the market, at least from a lending perspective, from what we've heard, has been being pretty rational about this stuff, in the sense that the expectation is that things are going to return to a sense of normalcy.
Let's say the uncertainty plays out for a longer period. And then you have investors on one side who have capital. It's not like private equity players don't have capital. They have they're sitting on a lot of capital, but then they want to look for the perfect deal, or the right kind of deal, the conservative, like they're gun shy right now, and they want to wait and watch for the economy to turn around. And let's say the economy takes its time to turn around. What happens in that scenario for as far as these private equity transactions are concerned? Are they going to continue to sit on the money, or are they going to begin to take more risk than they usually would in such a?
There's just been so much capital that's been raised. There is a lot of dry powder, and you're absolutely right. They have pools of capital, and frankly, that capital has to get deployed, right? If they don't deploy that capital, they don't get paid on it or for managing that money, and that's what they're in business to do, right? So they need to find a way to deploy that capital, albeit they certainly don't get paid if they deploy that capital and then lose it because they made a terrible investment. If we are in the current state where we're quarantined, 24 months from now, then I don't think you will be seeing transactions happening at that point, because now we're past the narrative that is keeping transactions and M&A work alive, that things are going to recover and return to a sense of normalcy, at least to the point where these businesses can sustain themselves, right?
I would think, Abe, that if there is capital, and if this is a long-term situation, then you use the capital to figure a way out. That if private equity can wear that hat, help businesses get digital, GI groups or physician practices. That will be an interesting, while it's not what they might have signed up for, but it'll be an interesting way to deploy capital and see practices and the healthcare industry, frankly, out of this situation.
I agree. I think That's actually a great point. I mean, it's going to shift what they're making investments into. I mean, there are areas where there are areas of healthcare that haven't been as impacted. So I was more so speaking about the current private equity initiatives that have been, where investments have been made and things like that. They will certainly stick by those portfolio companies as long as possible. But I mean, we're still seeing valuations for businesses that haven't been impacted by this. And if you have a financial track record to show that you haven't been impacted by COVID, it's actually showing private equity firms are showing a lot of interest in those types of business models. Hospice is an example of an industry that hasn't been as impacted. Interventional pain management is another space where we've seen they've certainly seen a reduction in volume, but they haven't seen the same reduction in volume that, say, the GI industry has. So that's drawn a lot of private equity interest. People think that on the other side of this, women's health is going to be see a lot of activity as well in the short term coming out of this. So there's certainly spaces that are going to see investment, and you'll see private equity firms transition towards that. Another interesting space will be, the healthcare IT space, as you just referenced, in terms of moving a lot of this stuff to the digital realm, and helping practices or helping businesses do that. You're certainly going to see private equity and venture capital chase those investments, because those are going to be big businesses. So look, private equity firms are smart. They're smart people. They're smart individuals. They're in charge of billions of dollars for a reason, and have been good stewards of that money. They're going to find creative ways to invest that capital. But if we're sitting here 24 months from now, I don't know if it'll necessarily be in the GI practice space, right? But they'll find ways to invest those dollars.
From the lens of mid-size GI practice or a small GI practice, and if you were to see it from their lens, not the super large groups and so on that are already created the platforms, but the mid-size and the smaller groups. Now, when you see it from their lens, what are the pros and cons of considering private equity at this point of time? What advice would you have for them?
I don't know if I ever told you this, Praveen. My parents are gastroenterologists and have a small GI practice with about 5 doctors. So, yeah. So this is like the type of conversation I'm having with them on a regular basis. But and they've certainly been impacted in a big way by this whole thing. For them, I mean, just speaking for them specifically, I mean, I think they've benefited. They would feel like there would be a benefit in partnering with a large organization that could help them navigate something like this, right? I mean, everyone would. Instead, they're like a lot of these other practices. They're scrambling to figure out where they can, get some funding from some of the government programs to meet payroll. They are having to furlough employees and lay people off, which are a lot of practices are doing, big or small. And it's a challenging environment. So certainly, one of the benefits could be it wouldn't necessarily be all on their shoulders to be doing those, handling those decisions and figuring out what to do. So frankly, they can keep their livelihood the same as it is today. Now, the cons of that, obviously, there have been specifically related to COVID. One of the things that came out with some of the government funding acts was that private equity owned companies were actually not able to participate in some of those some of the funding, right? So that is certainly that is an angle. You're kind of on the other side of the spectrum in medicine, where the government's kind of taking a stance. Hey, you have billions of dollars of capital. It shouldn't necessarily be on the taxpayers to help you get through a crisis like that. And whether you agree with that or not, I guess that's for another conversation. But certainly being part of that camp. And then again, similar cons that you had, pre-transaction. Again, there is a level of autonomy that you're giving up in joining a large organization, and assimilating with a larger group. And, like I said, there's benefits to that in terms of you're not bearing the whole risk. You're not having to deal with all the consequences of making all the decisions at that point in time. But on the flip side of that, you've given up a lot of autonomy to be in that position. So for physicians, I know that's always, the biggest concern with any of these transactions. But Same cons really still exist.
Okay. Well, Abe, thank you very much for your extremely insightful comments. I learned a lot. I'm sure people who watch this interview would also be learning a lot. Uh, do stay safe, and I will talk to you soon. Thank you so much.
Absolutely. You stay safe as well. Thank you for having me, Praveen. Really appreciate it.